Hey guys, my name is Misha Blackman and welcome back to my channel where we talk about loving Jesus, building wealth, and living life. And I'm super excited about today's video because this is part 2 of my debt and debt management series. So if you have not seen part 1, definitely check it out. I'll put a link up here in the cards as well as in the description box below. I'm super passionate about this 3-part series because debt is a reality for a lot of people, and consumer debt was a reality for me for a long time. So in today's video, we are talking about how I was able to pay off approximately $10,000 in consumer debt in about a 2-year time span. So in part 1, I started to explain how I accumulated this debt, how I got into $10,000 worth of consumer debt. And what I had said in that video is basically that I had 3 credit cards, and I was using all of the credit cards and I was using them responsibly. So I was paying more than the minimum payment every month, and I did have a good credit score because of that. The banks would increase my credit limit because of my good record, and so I ended up with a lot of available credit. And when you do hit rough times and emergencies, sometimes you will fall back on those credit cards in those times, and that is something like what happened with me. Another thing I forgot to mention in the last video is that, which was a good portion of my debt, loans. So when you are loaning money to a friend or a family member, I learned a hard lesson with credit cards. When I did want to help some people out in the past, I didn't have the cash myself to loan, I would loan using my credit card. And what I learned with loans in general, or with giving loans nowadays, is that I will only give a loan to somebody if it's money that I actually have, because we need to understand that credit is not our money. Like, credit is not our money, it's the bank's money, and it's not ours to give. So using a credit card to help someone out, like, you have to be willing to take on that debt if the person cannot pay you back or is going to take a long time to pay you back. So I did get into some of my debt like that by basically using my credit cards to help someone out, and then not being able to get those funds back in total to pay off my debt. So that added up on top of the debt I already had. So that was one lesson that I learned with credit cards, and I will never loan using credit ever again. And when I do think of loans nowadays too, I kind of just think of them as gifts. So if I can afford to give that particular amount of money away and it not affect me if I don't get it back, like, that's the way I look at it. I pretty much just give a loan as a gift and don't expect to get it back. So now with the background on how I accumulated all of that debt, this is number 1 method on how I started to pay it back. I realized that I needed more income. So I realized that with the money that I was making with the job that I had at the time, I was not making enough money to make significant payments onto the 3 credit cards with the interest that was accumulating every month. I was working paycheck to paycheck, and after paying all my regular monthly bills, I didn't have that much money left over to be putting towards credit cards when I still had to live. I still had to buy food and things like that. So I realized, like, you know what, in order for me to get this debt down, I need more money. And that's just the truth for some people. You need to evaluate how much income you're bringing in and all of your expenses, and then how much debt you have. So at this point, I was on the hunt for a higher paying job, and it did take me quite some time to find that. In the meantime, I ended up just taking on a second job. And so I was a very busy girl, and I was working pretty much like 7 days a week. And around that time, I had also got my car at that time too, which I was financing. So I needed to make enough money to also make my car payments too. So I was very busy, and that's what I was doing. And with the income from my second job, I used that to double up my payments on my 3 credit cards. So I was paying like double the amount that I was paying initially. However, I made small progress, but the interest rate was still so high, and so I still wasn't making as much progress as I wanted to make. So that brings us along to method number 2, which is reducing interest rates. So I realized that these interest rates are killing me, and they are stopping me from making progress and paying off all of this debt. What do I do? So what I did was that I applied for a line of credit. So a line of credit is basically an account that you are able to withdraw from, And it's a defined amount of money that the bank allows for you to have that you can access as needed and repay immediately or over a period of time. That line of credit does have an interest rate as well, but the interest rate is generally significantly lower than what you would find on a credit card. So for example, credit card interest rates could be anywhere from 18.99, 19.99%. And a line of credit interest rate could be something like 7% or 7.5%. So it's a huge difference. So similar to a credit card, the line of credit interest will be charged monthly as well. But what I wanted to do, so I applied for a $10,000 line of credit and I was approved from a bank, and that is because I had a good credit score. So they approved me for the $10,000 and I used that $10,000 to pay off the 3 credit cards balances that I had, because I was being charged about 19.99% on each credit card every month. So that was a lot of interest that I was paying. So I completely paid those off with the money from the line of credit, and now all of that money was consolidated in one lump sum for me to pay off, and I would make payments to one place. So it was a lot easier. The interest was much less, and my plan was just to take the amounts that I was originally paying to the credit cards and make the same amounts to the line of credit monthly, but now more of that amount is going towards my entire principal balance instead of going towards so much interest and a small amount of the principal. And the third method that helped me pay off my $10,000 line of credit is the employee share purchase plan. So I eventually got a new job, a new higher paying job, and at that company, I enrolled in the employee share purchase plan. Now let me tell you what this plan is. So essentially, an employee share purchase plan, or an ESPP, encourages employees to purchase company stock with an incentive. So the incentive is usually that you can purchase the stock at a discount, or the company will do contribution matching. And that's what my company does. So basically, this involves payroll deductions. So every time you get paid, you can choose what percentage you want of that paycheck to go to into this plan. And so in the beginning, I remember I chose a really small amount, like maybe 3 or 4%. And then as I made more money at the company, I increased that rate bi-weekly, and to I think about 7.5 or 10%. I can't remember exactly what it's at now, but that's what I was doing. So in the beginning, I think for the first 3 months or so, maybe 3 to 4 months, the company would match 100% of whatever I contributed. So let's say I contributed $100, the company would also contribute $100 as well, and then use that to buy the company stock. So that, I think the 100% matching was only for the first couple of months, and then going forward, there's 50% matching. So essentially, the company is just giving you free money to invest in their stock. And this is how this helped me. I was able to accumulate and see growth pretty quickly because of that matching. So I would check my account every couple of weeks, and the market was also really good a few years ago compared to how it's doing now. The market was doing really well, so I was seeing growth pretty rapidly, and I was able to accumulate this large sum of money pretty quickly. So what I decided to do is, as I was making my bi-weekly payments from my paychecks to my line of credit, $200, $300 every 2 weeks, around there, to pay off the debt, I waited till my ESPP plan got to around $3,000 or $4,000. I sold all the stock, took that out, and threw that onto my line of credit. So that brought my line of credit down, the balance, significantly. I loved seeing that. It really boosted my confidence, because I could see that such a huge decrease, and I was happy that wow, the debt has gone down significantly. And I'm just one of those people that I would rather pay off the debt that I have than can keep saving in an account. Because if I'm in the negative 10,000, but I have savings over here, to me, like, I'm still in the negative if you look at your net worth. So I'd rather pay off all my debt and then start saving fresh. Having an emergency fund is great. You can have a small emergency fund while you're paying off debt, but like, it doesn't make sense to me, for example, to hold on to like everything I'm saving in my employee share purchase plan while I have debt sitting here with no way to pay it. So that's what I did, and I reduced it quickly. And I think, so I started back, I continued contributing after I did that, started from scratch, and I think I made 2 more withdrawals. I did make like 2 more withdrawals, so I let it build up again, and then I sold again, put it onto my line of credit. So I did that 3 times, and in between doing that, I was just making my payments, 100, 200, 300, whatever I could do every paycheck. And that is how I was able to pay down my $10,000 line of credit. That's how I did it, based on my own situation and circumstances. So I have been consumer debt free for about almost 2 years now. I'm so proud of it because it took me a long time. And I'm really just grateful for the provision that God has given me to be able to have the job that I have and to be able to have the financial provision to pay it off. So in conclusion, I hope these tips helped you guys. I hope this inspires and empowers you to make a plan to attack your own consumer debt. I'm not completely debt free yet. I still have my car to finish paying off. So I'm financing my car and I have 1 year left, and then I will own that car outright with no more car payments, and I cannot wait for that. And then I also have my student loans that I'm still making payments towards, and hopefully I'm on track to almost paying that off as well. I did make a video on student loans. I will link that up here in the cards and in the description box below if you want to check that out. And in part 3 of our debt series, the final part, I'm going to be talking about your credit score. So my credit score has helped me in several situations so far in life. I've always tried to keep up a good credit score. My credit score helped me get financing for my car, even though my income was not super high at the time. Because I had a good credit score, that's how I was able to get financing. My credit score helped me get my line of credit to consolidate my debt. And my credit score has also helped me get my apartment. So there's a lot of different situations where lenders and people that you want to have some kind of contract with will pull your credit score to see if they can trust you, basically. And if you have a really low credit score, it could hinder your ability to get financing, get loans, get mortgages, etc. So in part 3, I'm going to be talking about what is a credit score, why is it so important, how to maintain a good credit score, and if your credit score is super low, I'll provide a few tips on how to repair that credit. Thank you guys so much for watching. Definitely leave a comment below. Let me know if you have any questions or if you have any tips to add for people about paying down credit or your own credit experiences. Like, what have you guys gone through in regards to debt? Let me know. I definitely want to chat with you guys in the comments below, and I will see you in the next one. Bye guys.